Well, hello, everybody. This is another rendition of the Unity Thread. My name is Phil Gibson. I'm with the Unity Group at Keller Williams. And today I've got a friend of mine, Keith Wexler, who's going to talk to us a little bit about patient advocacy. Keith's got a lot of in-depth background that I won't jump into. I'll let him kind of tell everyone how we got to this place. But Keith, welcome. And we look forward to having this conversation today about patient advocacy. I know I've had some experiences on my own that you've kind of given me some insight on. So tell us a little bit about yourself and kind of how you got to become a patient advocate.
Yeah, thanks, Phil. And I appreciate being invited today. My background pretty much for the last 30 years has been coming more from the provider side. My wife's a doctor of optometry, so I've worked with her in her practice in billing. My father is OBGYN. We also have a genetics practice. So with the topic of the conversation being, which is who do I talk to about, my effing bill? The reality is as I was saying to Phil before the meeting started, I've been thinking about this since he brought the subject up. And the answer is we could talk for 10 hours about this because I haven't talked to a single patient that hasn't run into some problem. And what started happening, especially during COVID, although I've been looking at it from the provider side, I noticed that more and more of my day I was getting calls, or my wife was getting calls about a bill she was getting, not from her, but from a hospital or a clinic or whatever. Or my father's patients were getting calls or calling our office about bills they were getting from facilities or from hospitals or from a pharmacy or whatever, and they had more questions. Well, my wife started turning those over to me. Dr. Wexler started turning them over to me. So I decided in August of 2021 that I was busy enough with what I refer to as the patient advocacy side, which is now expanded to family advocacy, to help people with issues, mostly insurance. It can be everything from healthcare insurance to long-term care to travel insurance. It's interesting. People are having it no matter what industry they're in. But that's sort of what led to that. And you and I were talking about some of your own personal and family issues with bills, and been there with. I understand that.
Well, what's interesting is, when you break down the whole thing with patient advocacy, I mean, I think a lot of people think about, there's this interaction with patients, as you've referenced. There's sometimes interaction with family members, doctors, nurses, health insurance companies, clinics. I mean, the litany of stuff that we tend to default it to the medical system. And what do you think? I mean, you've been involved in the medical system for a long time. You said 30 years. What is it that, in your mind, kind of has created this, this animal that it's okay to kind of just start throwing bills at people, or, the insurance company not paying on a certain code or whatever? What do you think's generated that type of mentality?
Well, Phil, if you go back to prior to, there's actually 3 steps. If you go back to 30 years ago, there really was only 3 insurance companies. It was Medicare, Medicaid, and then Blue Cross Blue Shield. So, and it was an 80-20 plan. So if anyone had traditional insurance, is what they referred to it as, if you had a $1,000 bill, insurance would pay $800, you pay $200.
Right.
Then we've seen a lot of manifestations of HMOs, PPOs, EPOs, POSs. They've been changing. Then when the Affordable Health Care Act came in, everybody thought that was going to solve and help with the pricing. What happened is it just created it should have been a single, people talk about single payer. I don't think it's so much a single payer issue. We have so many manifestations that, like as a good example, electronic healthcare records. Everyone thought electronic health records would help doctors spend more time seeing patients. If you ask any healthcare provider, not only was it an additional cost, most of their time, about more than half their time, is spent putting stuff into the electronic health records. It also was supposed to help cut the costs. All it did was increase the costs, and patients feel, the annual exam went from 45 down to 30 minutes, down to 15 minutes. The complaint I've heard from a lot of people recently is the fact they don't even see their doctor.
Right.
They complain all the time and they say, hey, I went in, it took me 10 minutes to fill out all of the forms at the front, including the HIPAA form and everything else. Then when I finally got back, they took my height, weight, and blood pressure. I sat there for 10 minutes. Finally, a nurse came in and never saw the doctor. We deal with OBGYN and genetics, and we have pregnant moms who were 28 to 30 weeks who've never seen an OB. So,
Wow.
a lot of it is trying to come up with the different models that make sense. So, we have hospitals that have bought all doctor practices, and those are called hospitalists. We have concierge docs who've left all insurance plans and it's self-pay only. We have variations upon those themes. A lot more of the providers are doing sort of a combination. We're even the same way. There's a lot of patients, especially with COVID, who made a decision to go bare. If it's going to be the majority, like my wife and I went into the collaborative, because we're office of one, which a lot of offices are. So we're not eligible for group insurance. And for us to get the plan, we had a choice of 4 insurance plans. It's for 2 of us, about $1,100 a month plus a $6,500 a year deductible, $12,000 family deductible. Well, even at $1,000 a month, you're looking at $12,000 a year. And a lot of people can't afford that.
Yeah.
And a lot of people aren't eligible for Medicaid because they make too much money. There was just an article that the state of Colorado and all the states are looking at like here in Colorado, 550,000 insureds are all being re-audited with Medicaid to see who's eligible and who isn't eligible. So that's going to create a lot of uninsureds. I think, the biggest problem is, and you and I have talked about, for 4 years, we've tried to pass a transparency bill.
Yeah.
I mean, you and I have talked about that a lot. And unless you know all of the levels, so like if you call our office and say, I need an ultrasound with Dr. Wexler, we tell you that for a level 2 ultrasound, it's $500. There is no professional reading above it because Dr. Wexler is doing it. There is no facility fee above that. It's $500. You get a bill, receipt at the end of the day that says it was $500. You won't get a bill from anyone else. We hear every single day people who choose to go through their insurance or whatever that the bill for the ultrasound was $500, but then they got a professional reading of another $300 or $400 by a radiologist, a maternal fetal medicine they didn't know about, and then they get anywhere from a $500 to $1,500 facility fee. And they always call and they say, "Where's the transparency?" Well, when they call to schedule the ultrasound department, and you and I have had long discussions about this, doesn't really understand that there's going to be a professional radiology or maternal fetal medicine bill, and that the hospital is going to bill also. Is that omission or is that commission? You and I have had long discussions about this.
Right.
I'll just kind of leave it at that. The last thing I've told you in all the years that you and I have known each other is I refer to my patient advocacy as the squeaky wheel. And what the squeaky wheel is that it's been shown, and the models are out there, for every 1,000 claims that an insurance company, a hospital, or whatever receives, if the insurance company receives 1,000 claims, they can always come up with a way, legally, I'm not talking about funny business, legally come up with a way. The date of birth is wrong, the date of service is wrong, the diagnosis is covered, not covered, whatever. So if for every 1,000, they only process 50%. It's a little lower than that. It's about 30%. They deny 70%. There was a model. That's changed over the years. But for every 1,000 claims, they pay 300 of them, and they send 700 back for whatever reason. At the end of the day, only when they send it back to the hospital, the pharmacy, the doctor's office, whatever, only about 50% of those 70 claims ever get resubmitted by the provider. And the reason for it is that patients are so afraid that they'll lose their doctor, they'll lose their hospital, they'll lose their insurance, that they usually just go ahead and pay it. Again, is that omission or commission? I'm not quite sure. I mean, it's really hard to pay your bill when, if I send you a bill, you call my office and you pay a bill. Most people are getting bills out of Atlanta. They're getting bills out of New York, even though they're seeing doctors in Denver. When you talk to the people in Atlanta, they're on Central Time. when you talk to them and try to get more information, they tell you they have to talk to the doctor's office. So it's not a good system for patients. And it's not, to be honest with you, it's not a good system for doctors and hospitals.
Hey, so there's a few things I want to unpack real quick that, I've just from personal experience have noticed, being self-employed, I've run across the exact same thing that you've described, where you have to go out on the exchange, to get a program, or you may be doing some of these outlier programs like catastrophic only plan, or maybe you're going through one of the, the health ministry types of programs that are out there. But, most of for the last probably since Obamacare came into play, I've been a cash pay, client. Let's just call it that. And one of the things I've noticed since COVID is that these cash pay rates have climbed significantly. And I don't know what the reason for that is. It's almost to the point where they are at the same level as what they might get reimbursed from the insurance company. That's my impression. Now, whether that's true or not, don't really know. That's just an impression that I've seen as, I've been, had to utilize different, and this isn't just like family medicine or internal medicine or, the dermatologist or whatever. I've just seen these things kind of climb. And it seems like you've seen a pretty precipitous climb since the inception of COVID. Is that reality, or is that just my impression?
No, I think it's reality. I think the thing that's ironic is one of the things as far as self-pay goes. When we do self-pay, we always have to put what the prices on our claim is if we were to bill Medicare or Medicaid. Mm-hmm. And the reason for that is it's illegal to give a private pay patient, a self-pay patient, a discount greater than the discount that Medicare or Medicaid takes. Mm-hmm. So if you think of Medicare and Medicaid as being the basement, so if you have, I use $1,000. If you have $1,000 bill and Medicaid will reimburse for the procedure codes they send in, $500. You can't give a self-pay patient who's having the exact same thing anything less than that. In our case, because of COVID, and this is where it's gotten real tricky, we, like my wife is a doctor of optometry, was closed for 90 days as a non-essential doctor.
Right.
We've lost probably 40% of OBGYNs in the region who've either couldn't keep their practices open, went out of business, were closed because all they could do was high-risk OB or OB. They couldn't do GYN. Mm-hmm. So the answer is yes, it absolutely during COVID has gone up. Main reason is we can't see as many patients. Like we're under the COVID protocol. We're only seeing 4 OB patients a day because the ultrasounds take an hour to an hour 15 minutes, and then we have to clean the whole office between each patient and keep them socially distanced. So the answer is yes. But from a cynical standpoint, most offices would rather be paid self-pay because it's above what insurance would pay. So I'm going to say that.
That's, and that's a little bit of a, just from speaking from this perspective of a customer, I'm saving the office, clinic, hospital, whatever. I'm saving them a lot of grief because to the point you made just a minute ago, if I submit 1,000 claims and I'm only going to get paid on 300 of them,
right? But
I'm sitting here and I'm going to pay you right now.
Absolutely.
I'm one of those 300 that's going to pay you. Why shouldn't I get the benefit of the overhead processing time, whatever that is? And I don't know if that's 10% of the cost of a claim or if it's 40%. My guess is it's higher because you have so many people having to process these insurance claims.
Oh, it's extremely expensive to process. Right. Even the insurance companies have a number. The first time they get a claim, it's less than $1 for them to process. The second time they get a claim, it's $4 or $5. And by the third time they get a claim, they just want to pay it because the reality is it's $10, $15, $20. And that's all their time and everything. No, absolutely. If you talk to, that's why the concierge, hospitalist, self-pay model, and we're seeing with most doctors' offices, you're seeing a mixture of about 50% of our patients are self-pay now. Right. A lot of them have the care plans that you've talked about. They have, and this gets kind of tricky. More and more people are going out and finding either repricing plans, reduction in pricing plans. What's weird about it is, even from the doctor's standpoint, the biggest problem, Phil, is like Lori owns her own practice. So my wife owns her own practice. My dad owns his own practice. When we make a decision to give a discount, it's across the board. It's like owning your own restaurant. If I say to you, hey, you want to bring in and do $1,000 meal, and for you, Phil, bringing your family in, it will be $500 and nothing above that, and you book my restaurant for $500, that's easy to do. The problem that everyone's running into is when your restaurant is owned by a hospital, or your restaurant is owned by a consortium where, like, a lot of the OBGYNs in town are now employees of a large OBGYN group. And people would think, oh, if there's 10 OBGYNs, they're all practice owners. They're not. They sold their practices. They're paid a flat salary. And the thing that gets a little tricky, and, you know, there's the Stark Amendment, which talks about kickbacks, and you and I have had a lot of discussion. Stark 1 and 2, but basically a lot of the docs who've sold their practices, their salaries are based upon what revenue they generate for the hospital, the medical group, the practice, or whatever. So, you know, if you want $100,000 salary, but you're only seeing $1,000 worth of patients 2 or 3 times a week, probably not going to clear that. So, you know, where it gets real tricky, and, you know, you and I were talking about why does it cost me $500 to $1,000 more to walk 80 feet from my doctor's office? That's part of the problem now, is that there are so many people involved. It's more like a food chain now, where you have the growers, and then you have the growers and the ones that take it out of the fields. Then you have the truckers who take it to the processing plant. And there's an awful lot of fingers in the pie now, especially since COVID.
Yeah. No, that totally makes sense. Hey, so couple things that I want to kind of cycle back to your role as a patient advocate. So, and you brought this up when you were describing some of the activities. So you have these insurance programs that people are, you know, assessing on an annual basis. Usually it's October, November, they're having to make decisions on either renewing what they've got. Some people are moving into Medicare. Some people might have to move, you know, into Medicaid, or maybe dual eligible, you know, or maybe they're, you know, changing plans altogether. So first question I guess I have for you is related to, you know, that aspect. Are you finding yourself supporting people to help them understand and make decisions on this multitude of plans that are out there? I mean, the acronyms that you threw out, you know, that's not even the list that's a shortened list. I mean, it goes about as long as your arm of the different acronyms that could potentially be out there as it pertains to insurance programs. So I guess my first question is, are you involved in any, you know, activities related to helping people understand whether, if I'm a self-employed business owner, or I'm a business owner with 10 employees, or I'm just an individual like myself who's trying to figure out, okay, what's the best plan for me? So that's for question one. Question two is the transparency piece that you mentioned. I thought that was interesting. I know you and I have talked about that ad nauseum, but one of the things, you know, if I'm going in for, let's say I've got a scheduled procedure and I'm going into, let's say it's an ACL repair. As a patient advocate, are you getting involved in that side of it pre-procedure? What kinds of questions should I be asking before I go have this procedure to know, hey, this is what I might be getting charged? Because, you know, like you and I talked, I had a recent experience, for a colonoscopy that, you know, there's a lot of things that weren't necessarily presented, or if they were, I certainly didn't catch on to it. Let's just put it that way. And maybe that's the best way. Maybe it was presented and I just didn't see it. But the biggest thing is, you know, it's that transparency piece that you mentioned. So that's my two questions. I know those are both long, but let me know your thoughts.
No, they're good. I understand exactly what you're saying. Yeah, what's interesting, in August, when I switched over of 2021, my busiest time, which I never was expecting because I'm not an insurance agent, I don't sell insurance, And I was even being approached by insurance agents who had clients who were saying, okay, now I really don't understand what's going on here.
Mhm.
During open enrollment, we basically have from October 15th through really December 15th. So, I had, especially with COVID, I got a call on the 10th of December by a high school friend whose wife had been furloughed from her employer and had been on COBRA for 18 months. There was a memo that went out when, it's not political, I would say it's not political, when both parties were talking about extending COVID benefits and furloughs another 3 to 6 months during and extending the open enrollment period.
Sure.
When that didn't pass, all of a sudden I got a call on December 10th because they emailed all of their employees that even though they had told them in the summer that they were going to extend another 6 months, as of the 15th at midnight, if she did not have insurance, she would be uninsured as of January 1st.
Right.
Otherwise, we'd have to wait. So yes, my busiest time is during open enrollment because it's changing every year. We don't
Right.
even know who's going to participate during open enrollment. And then all of the discussions and changes. So Kaiser made changes that would go into effect January 1st. United Healthcare has the Colorado Doctors Plan, which was a doctor's plan that they bought. That was a doctor's plan only. And that went into effect January 1st, 2022. So yes, because depending on what you want to do, you really have to kind of make a decision in a short time. I don't like making a decision in less than 5 days. We were trying to go in through her plan. They told her she was eligible for other things. The reality is it was individual through the collaborative. And even when we tried to do it, what was weird is then all of a sudden they sent us out of United Healthcare, which is what it was under, to these repricing plans
Mhm.
that don't pay any bills. So absolutely. And it's the type of thing that the busiest time for me is my biggest group that I started with, really from a legacy and longevity planning, were the Medicare Advantage, long-term
Sure.
care, where they were like, with COVID, I have a friend who had a $100,000 COVID bill from the hospital. Medicare only pays 80%, and he had a secondary, but the bill was 100,000. Let's say they paid 80,000, 20%, they left 20,000 versus a Med Advantage plan. I had another client. So, you're looking at somewhere negotiating on $20,000 worth of medical bill.
Right.
On the second one, I had a client who had a $100,000 bill, was part of a Med Advantage plan. And all he owed at the end of the day for his same 100,000 COVID admission was his $300 emergency room copay through his Med Advantage plan. So yes, on that standpoint, but that's really on a case-by-case basis. But yeah, during the open enrollment time, that's the biggest thing because every year the rules change. As far as the transparency, the problem with the transparency is, yes, we definitely want to do it ahead of time. So I have a client right now who there's a doc who wants to switch her to Entyvio. Medicare absolutely doesn't pay for Entyvio, and they shut that down entirely. So she was just like, bag it, I'm not doing it. Then the Entyvio rep said, hey, if you get turned down by Medicare, we might be able to put you into this repricing plan and at least get it covered that way. Well, then she had a secondary because her husband, she's a widow, her husband was a retiree of a company. So she was a pensioner widow.
Yeah.
And we approached them and they said, yeah, we probably can look at that. And we have a pricing thing on this. So let's look at it. But you're talking about a $4,000 or $5,000 a month drug.
Mm-hmm.
And this is someone on a fixed income who's a widow. So we looked at it and she was ready to just bag it. Then when we talked to the doc's office, they said, oh, we looked and it's up in Wyoming. And they said, oh, well, we want to do this colonoscopy, but the hospital's not a contracted provider and the doctor's not a contracted provider and the anesthesiologist isn't a contracted provider, so we're not going to pay for it. So I got on the phone with the customer service person I like doing conference calls with the insured, and she turned it over. She said all of her information. I said, well, I have 3 questions. The first question is, Who is a participating Aetna hospital in Wyoming? Silence. Well, we'll have to talk to a supervisor. 10 minutes later, they come back and they said, we don't have any Aetna providers. I said, right. Well, based upon her plan, it's not a 70-30 like you were quoting her. It's a 90-10 because we've been through this before. And she said, yes, sir, you are absolutely correct. Her out-of-pocket would be her $300 copay plus whatever's left after the repricing would be 10%, not 30%. The second thing we got them to do is to admit that the doctor was in plan, even though the group, when the doctor called, was told they weren't.
Mm-hmm.
And then we got on a conference call with the doc to explain that they were in plan and that this is how they were being recognized, and the anesthesiology group and the medicine. So yes, just making a phone call. The best one I had was a family who needed DNA testing, and it was going to be $15,000 per person. And what we did is we got on the phone and said, you have this very unique opportunity for a very rare disease. Instead of charging the family $45,000, what can we negotiate? Because you'll be able to study an insured or an affected, sorry, not an insured, an affected. It was all self-pay. Nobody's going to pay for it because it's experimental. But you have an affected daughter, a carrier dad, and an unaffected daughter. Wouldn't that be worthwhile to study all of them and see what the changes are, and then, maybe get something out of it? And we got them to reduce to $15,000, the price of one, because it was in their best interest. So we saved the family $30,000. The worst one I ever had was back east, where the husband died, not from COVID, in the hospital, and the wife got a $100,000 life insurance policy. And I do post this on my website. And I was called by the grandson, and he said, grandma's about to get this $100,000 life insurance policy, and she just got a bill from the hospital for $83,000 for grandpa who died. We need to make a decision because they're going to turn her into collections on Monday. So I audited it over the weekend. It took me about 4 to 6 hours. And I called the billing person at the hospital on Monday, and I said, you have two choices. You either bill Medicare, since you have chosen not to bill Medicare, which is fraud,
Mm-hmm.
and you will cease and desist billing this woman until we get the EOBs, or I'm calling Medicare and I'm turning you and the hospital over for commission, not omission. Because he said, oh, well, that was an omission on our part. I said, it's not omission. And I don't know how he figured out she had a life insurance policy. She was ready to take the life insurance policy, cash it, and write a check for $83,000 to the hospital. That's my worst case. Yeah. So yes, at a time is always the best. If it's an emergency, we have some flexibility. But things that are routine, just the difference between getting those things cleared up. And a lot of times, I don't know how a patient's supposed to know that the anesthesiologist, and you and I have talked about this, the doc's contracted, the hospital's contracted, the facility's contracted, but the anesthesiologist who they have to work with or not.
Yeah. Yeah.
Under the transparency rule, you should be able to know what your out-of-pocket expense is going to be if they're non-contracted.
Right. Well, and the one thing too that I would highlight for people is that, if you're in a fairly large organization nowadays, maybe they are contracted with a United or a Blue Cross or, one of the Cigna and one of the big carriers. But the other thing you need to kind of keep in mind is a lot of these, even if they're mid-sized to large companies, they are self-insured now. They're going to a self-insured programs Absolutely. That are being, maybe they're being run by United or run by Blue Cross Blue Shield, but technically they have their own rules on what they're going to reimburse. I just learned this myself. Is it what their capacity is for reimbursement? It doesn't necessarily need to follow. They can set their own guidelines for that, and so it's important for employees, to understand some of this stuff. Usually, the self-insured programs are pretty good, and they're a little bit more affordable. And as long as the company or the provider that's kind of managing that is fairly explicit on what is covered and what isn't, then I think, that's good. But it seems like they just kind of keep the list pretty basic on the coverage, what's covered, what isn't. And then when you get into the weeds, that's when it gets interesting. At least that's been my experience. So.
Well, and I'm going to rephrase it a little.
Yeah.
Basically, self-insured plans, United Airlines, IBM, Amazon, Self-insured specifically means that they contract with United Healthcare, Blue Cross Blue Shield, to administrate their claims.
Right.
Anytime there is a dispute, it's an employer-employee dispute.
Mm-hmm.
You don't call Blue Cross to get it worked out. You don't call United to get it worked out. You have to call HR at United Airlines or at Amazon and say, hey, my claims aren't getting paid. And where it gets real tricky is when they're self-insured, because it's an employee-employer dispute, you really can't even go to the insurance commissioner.
Yeah, that's exactly right.
You and I have had this discussion. The insurance commissioner is there not to protect the hospital, not to protect the doctor, not to protect the pharmacy, not to protect the insurance company. They are there to protect the insured.
Right.
To make sure that if your wife comes into our office and your insurance company says that she owes $100 and I bill her $1,000, that's called balance billing, and you can turn me into the insurance commissioner, and the insurance commissioner will look at it and he'll say, Keith, what you're doing is not legal. You need to stop. You're only allowed to collect $100. And I would say, you are absolutely correct. Yes, sir. Yes, ma'am. I'll write it off. Don't want to lose our license or anything. That's called balance billing.
Sure.
Most people don't even understand that.
Yeah.
With the self-insureds, and I just went through this with the federal employee, none of her claims were getting paid. I made her call HR, and she finally got HR to process the claims on her behalf. The only other thing that I'll say is where patients are getting frustrated is some of the self-insured companies. So we deal with GYN women, and I have 2 women who work for a company that under ERISA, because federal, companies that are self-insured fall under ERISA, which is a federal law.
Yeah.
And under ERISA, these companies are telling their employees they will not talk to the patient. They will only talk to the employee.
Yeah. Yep.
So the husbands have to call up in this case and say, I'm calling on behalf of my wife who had annual exam and pap smear, and you're not paying her bill. That does not go over very well with educated women in 2022.
Sure. Yep. No, I get it. I totally get it. Yep. So, we spent a lot of time talking about the provider side. We've talked a little bit about the insurance side. I know you had mentioned that you're kind of handling, some of these, the more long-term stuff, the forever home stuff, with some of these, being an advocate for some of the seniors out there, the medical, legal, and financial aspects of not only patient care, but also just, what can happen, beyond that aspect. Tell us a little bit about that.
Yeah, and you and I kind of talked about this when we initially talked about doing a talk. One of the things I was interested in, because of how you are sponsoring it, is My Forever Home. And what's been interesting with My Forever Home, and I think realtors and the real estate industry is going to have to look at this more and more, as people are looking more and more about the 3 options of staying in your forever home, getting in-home nursing care versus going into nursing care,
right,
and or hospice. Hospice, you don't really have a choice. Hospice is where they say you pretty much, it's end of days. Mm-hmm. Where do you want to live? A lot of people are doing hospice in home.
Yep.
What one of the clients that I started working with, I gave a talk, a Zoom meeting to a group of war veterans, and I had a 93-year-old who had to have a double knee replacement and had to do about $4,500 worth of home renovations. It was told that he'd be reimbursed up to $4,500 with the VA. Well, he's 6 months to a year out and he's never gotten reimbursed. Mm-hmm. And what the new normal for everybody now is, Phil, is 45 minutes is the new normal. You're going to sit on hold for 45 minutes. And then God forbid you ever get to talk to anyone. They'll say, oh, I'm not the right agent. You need to talk to my supervisor. Oh, I'm not, whatever. And I have another client right now, potential client, who his wife just got put into a memory care. He wants to stay in his forever home. So she's in memory care. He's in his forever home. And the siblings don't feel that he can take care of himself. But he still has his faculties. So one of the dilemmas is, because they built their forever home together, And so, it's the type of thing that, and you and I talked about this, if you're going to make renovations to a home, so if we're going to sell our house, we want to have a realtor come in and say, these are the things I'd fix up. These are the things as is, because it's a hot market. But what we're running into is, what is the cost to renovate to be in your forever home versus going into nursing home care? And with long-term care, the number that everyone keeps kicking around is you're looking about $7,000 to $9,000 a month.
Yeah.
So all of a sudden, it'd be nice from a real estate standpoint to get those homes and move them into nursing home care and everything else. But when you look at $70,000 a year, $70,000 to $90,000 to $120,000 a year, depending if it's memory care assisted, your forever home is starting to look a lot better, even if it means some renovations. Right. The only thing that I would say that I'm working with some of them more is the siblings. So the kids, if mom and dad are going to put in ramps and lower countertops and put in bars and, to get into the shower and into the bathtub, that might not be something that millennial families want to spend money on fixing. So that is having a dramatic impact. So yes, they want to support mom and dad in their forever home. But the two things we have to remember is that your forever home, if and when you try to sell it, because you're going to need more assisted care, how much are people going to take off and say, you lowered all the countertops in the kitchen to wheelchair height, and we don't have anyone that has a wheelchair, so we're going to have to fix all the countertops. We're going to have to fix all of the, in the bathrooms, in the kitchen, we have to raise all of the cabinets. You're talking about a huge renovation. And the family needs the money at that point in time. And I'm being approached by more and more of the siblings who are saying, we're going to take $100,000 or $200,000 or $300,000 hit on this house, even in the Denver hot economy, because that's what it's going to take to renovate it back to
home for the traditional family. Right.
For the traditional family. Exactly.
Yeah. And that's the other side of that too is family caregiver stress, the stress of and then right now in the marketplace, finding caregivers, whether it's independently or through an agency, can be very tough right now. So that whole aspect is really challenging. Yeah, certainly people want to stay in their home where they've been for who knows, maybe majority of their if they're married, their married lives, they've probably been there, some cases 20, 30, 40, 50 years. It's a place that they're comfortable in and don't want to have to leave that. But then the other side of it, some of these homes they're not truly safe, for people to stay in long term. Even with some basic modifications, there's still some challenges that can occur, with some of that stuff. So yeah, it's good people are reaching out to you, though, have those conversations. That's good.
Well, and I think one of the other problems, Phil, is when you start saying to your mom and dad, I don't think it's safe for you to stay in your forever home anymore. You're now on a short walk to funeral planning, and even though it could be years, all of a sudden you're taking away their personal freedoms.
Right, and we're all prideful.
Starting that discussion.
Yeah, we all have we all have pride. We're all very prideful, and I think anytime to your point, anytime you start to take away somebody's independence, who's probably been that way since they were 15, 16, 17 years old.
Absolutely.
You're now as a family member, you've become the bad guy. And it's very difficult conversations, and it's nothing easy. So, it's really good. There's individuals like yourself out there that can, bounce some ideas off of and have some conversations on, what this looks like.
Well, and I have, it's like you and I have talked about it. I mean, realtors are being put in more and more positions of being a family advocate, whether they want to be or not, because families don't like to hear from you that, us doing these to support mom and dad to stay another year or two in the house means that the equity in the house might not be there.
Right.
Because the kids want to support. And, I think that's one of the things is you want to support your family, you want to support your parents. But at the end of the day, and I have a situation right now where there's dual power of attorney, which I talked to the attorneys who do elder care. They've never heard of equal due power of attorney. The problem with it is the dad's in memory care spending $7,000 to $9,000 a month. He's going to be in memory care till the end.
Yeah.
The one son is saying, we need to sell dad's house to pay for the memory cares for dad's well-being. He's extremely healthy. He just is in the need of memory care. He's probably the healthiest resident.
Mm-hmm.
The other son with dual power of attorney wants to sell everything, put him a home, and then liquidate it between the two sons. It doesn't work that way.
Right.
So that's a dilemma also, is if you have one family member, one son, one daughter who wants to put mom and dad in a home and sell the place so that they can get the money from the sale, whether you like it or not as a realtor, you're going to be working with attorneys and family planners and everything. And so it's putting you in a funny situation. And it's weird because when I was talking to the elder care attorneys and the financial planners and all of those, they're like, we really can't represent them. We need someone who's representing the family, who's different. It can't be us, because when we work with the courts, we have to be independent. Right. So it's been kind of interesting for me in that area, which is, it's how do you work with the families to make sure they can make the decisions they want, and work with the realtors, because if I come to you and I'm representing a family, I want you and your wife to be able to get me the best price for my client, because that's what they're going to be using to do their long-term care, their nursing home, and then if one of them dies, the other one's going to need to live off of that. So yeah, I'm going to need you and your wife as a resource also.
Yep.
And so you're going to be asked to do more family advocacy as on the realty side, whether you know it or not. So
there you go. Yeah. Yeah. And those things can be, they can certainly be contentious at times, but I think it's good, to have, I know, this place where you're at, this liaison, mediator, kind of advocacy person. I think that's, it's a needed role in the current environment. So,
well, it's been fun. I mean, it's definitely been expanding. Mm-hmm. But it's been interesting because people need help, and even the attorneys have approached me and said, hey, I understand this, but I don't want to deal with their medical bills.
Yeah.
Or, hey, I understand this, but I don't want to deal with their home renovation and what the house is worth.
Yep.
So it's been interesting, because even the people, as the one elder law attorney said to me, he goes, well, you're not stepping on my toes. And I said, right. I'm trying not to step on anyone's toes. I'm trying to find that happy median in between everybody.
Sure. Well, and that's a place too, where we can be of a resource, both Beth and I, as far as putting people in touch with individuals that can handle that kind of, whether it's renovations or, hey, we got to get this thing cleaned up. We've got a lot of stuff, quote unquote stuff, that we've got to get rid of. How do we get rid of this stuff? Some of it's a giveaway, some of it's, you can auction depending on the value of the items, all sorts of different avenues to pursue.
Yeah, on that. Absolutely.
Yeah, great. Well, hey, we're kind of getting to the end here. Absolutely. I wanted to, any last comments or anything you'd like to say before we wrap up?
Yeah, the last thing I'll reiterate is, whether it's patient advocacy, family advocacy, bills, or whatever, in the end, if you're not advocating for yourself, and like I said, I call it the squeaky wheel. You and I talked about a bill that you were getting. There's no downside to trying to fight it. And in your case, and in most cases, when I work with clients, they can usually get it resolved or reduced. Mm-hmm. Most people pay the bill. They're afraid, as we said before we went live, you and I were talking, that people are so afraid that they're going to lose their doctor, they're going to lose their hospital, they're going to lose their insurance. They just go ahead and pay it. My feeling is you can always pay the bill, but I think it's so rare for someone to call and say, hey, this is what it is. Is there any way to reduce it? What would it have been? Hey, I want to have this. What would the self-pay be ahead of time? With most insurance companies now, I would encourage, and I'll kind of leave it with this. Just because you have insurance doesn't mean you have to use your insurance. And what I'm encouraging more and more people to do is to say, hey, I have to go get a mammogram. If I use my insurance, what do you bill insurance?
Yeah.
So like for when we do a level 2 ultrasound, we bill Medicare and Medicaid. Medicare doesn't pay for OB, so it's bad. Medicaid, we bill them $1,150. Our self-pay price is $500. I give them a form that shows 1150, and I always makes them nervous. And I say, we're not balance billing you, but by state and federal law, I have to tell you what we would have billed the insurance company. Everybody knows those numbers. And I think what most people need to do now is call up and say, and it's true with the pharmacies. A lot of people are able to get drugs. I mean, I have patients right now that have $90 copays on a $15 drug.
Yeah.
That's ridiculous.
Yeah.
Do a self-pay. Don't,
Yeah.
The problem with it is if they bill your insurance, they have to collect the $90. That's the copay that you owe. That's the insurance company requires that.
Yeah.
I think it's ridiculous to pay $90 for a $15 drug.
Yeah.
So I think what I'll leave you with is there's nothing wrong with asking for self-pay. And you don't have to, there's no downside of not using your insurance. But I think a lot of people think they have to use their insurance. And then the only other thing I would say is check and see what your deductibles are and whether the provider you're going to use is going to roll 100% or the insurance is going to roll 100% of the services into your deductible or discount it and roll it into your deductible. Because like for our $1,150, because we don't have a professional fee or a facility fee, it's only the discount. It's the discount amount that's applied to your deductible. I can't bill you for the rest. Versus I talked to a patient who has, she's an employee of a hospital and they roll 100% of the charges at the hospital into her deductible first before they pay a penny.
Yeah.
So what if it costs for $3,000 to go to the hospital, which is her employer, versus $500 to come to us? That's a huge savings for, I don't care who you are. I don't care how rich you are, saving $2,500 every time.
Oh yeah. Absolutely.
I think it's worth 1 or 2 phone calls.
Yeah. Yeah. Well, thanks, Keith. I appreciate all that. And,
Absolutely, Phil. I appreciate the opportunity.
You bet. And, I would definitely, through this conversation, one of the things I would encourage everybody to do is that if you see something that was denied on a bill, put that phone call out there just to find out, okay, why was this denied? Could have been a simple oversight and it was the wrong code that they sent through. It could be, hey, this supposedly was out of network when in reality it was. I would just encourage you to just make some phone calls and try to understand and educate yourself. Don't just automatically pay it. Because to your point, Keith, I think it's not only people who are afraid they're going to lose something, but I think the other side of it too is people are afraid they're going to get sent to, collections, on a bill, when in reality, you need to, if you have questions about the bill, you should question it because they're not going to send you to collections in 30 days. Heck, they don't even get paid by insurance in 30 days in most cases. So it's like, it's worth having those conversations with the provider, with the hospital, the insurance company, which are maybe all three. And then, if you feel like you're still not clear, then I would encourage people to reach out to Keith, have a conversation so you can gain some clarity on what this, and hopefully this video today has provided some insight on the process. I know we threw out a ton of acronyms today. We threw out a lot of different pieces of the puzzle. And, like Keith and I talked about early on, we could probably spend a full day talking about all the nuances that go into this entire process. But bottom line is this, folks, I would encourage you to reach out to Keith if you have questions about any area of patient advocacy, family advocacy, or, you've got an elderly person that you have some questions about how to pursue a given avenue. Because Keith not only may not have all the answers, but he has resources that he can draw on. And I would encourage you to take your time to reach out. Once again, thank you, everybody, for tuning in. This is Phil Gibson with the Unity Group. I will be providing Keith's contact information at the end of this video. So if you want to reach out to him, please feel free to do so. And again, Beth and I are with the Unity Group, and we would love to help you in the sale or buying of a property here in the Denver metro area. So give us a ring. Thanks again, Keith.
Thank you, Phil.
Have a wonderful day, everyone.
Thanks.